All right, welcome to the deep dive. Today, we're looking at some pretty interesting market movements, especially what's been happening in the tech sector. Our goal here is to quickly break down what happened recently and give you the key takeaways.
Exactly. It's not just about the headlines. We want to understand the connections, the implications behind them, see what kind of bigger picture these shifts might be painting for you.
Okay, let's unpack this then. Based on some recent market developments, we saw quite a downturn on July 11th. The Sensex and Nifty, they continued losing for a third straight session. So what were the main forces at play here? What was pulling things down?
Well, what's really interesting here is the sort of double whammy effect. The market was definitely feeling the pressure from concerns over new tariffs. You had President Trump's announcement that 35% tariff on Canadian imports, plus talk of broader 15-20% tariffs elsewhere.
Okay, so trade worries were a big factor.
A very big factor. But at the same time, you also had significant selling pressure in IT shares. This came right after TCS, Tata Consultancy Services, released their Q1 FY26 earnings. And that really contributed heavily to the decline.
So it wasn't just tariffs, but IT performance too. Let's talk about those TCS results then. They seemed to disappoint investors, even though they reported a profit increase. That sounds a bit contradictory.
It does on the surface, yeah.
Why did TCS shares tumble, 3.5%? On July 11th. They were a top Nifty loser.
And this was after reporting a 6% rise in Q1 net profit to over 12,700 crore rupees, which I think actually beat expectations.
That's right. It did beat expectations. Yeah. And this is really a classic case of the market looking beyond that bottom line profit number. While net profit was up, the company's revenue only rose about 1.3%. That's pretty modest.
Okay, so top line growth was weak.
Weak. And the CEO himself pointed to, and I quote, continued global macroeconomic and geopolitical uncertainties. He said they were causing demand contraction. He also highlighted a 3.3% sequential dip in growth.
Sequentially, okay. Yeah, quarter on quarter. And a big reason for that was the ramp down of their big BSNL deal, the government contract, plus just general softness in international business. They also mentioned more deals getting delayed.
Right, delayed closures, I see.
And the analysts picked up on this too. Many of them started trimming their price targets because the growth outlook for FY26 just looked hazy. It really tells you the market is prioritizing future growth potential right now, maybe more than current profit.
That makes sense. A shift in focus.
Yeah.
So was this just a TCS issue, or did we see this ripple effect across other IT companies? Let's look at HCL Technologies next. What's the expectation there?
Yeah, connecting this to the broader picture, HCLTech is also expected to report a, let's say, weak Q1 for FY26. Analysts are forecasting a dip in net profit, maybe around 3.76% quarter on quarter, and basically flat revenue.
Flat revenue, okay. Why is that?
Well, they're citing some seasonal weakness, particularly in their services and products arms. Plus, there's this pass-through impact from productivity resets and just generally subdued demand for services. Margins are expected to tighten too.
So a similar kind of pressure then. What about Infosys? Their shares dipped on Friday as well.
They did. Infosys shares fell about 1.34%, down to around 1,594 rupees. Now, while their quarterly results can fluctuate a bit, it is worth noting Infosys has shown pretty consistent annual growth. Revenue and net profit were both up in March 2025 compared to the year before. And they have strong balance sheet, zero debt.
Interesting. So strong fundamentals, but still caught in the downdraft. And LTIMindtree, another IT name that saw a decline.
Similar story there. LTIMindtree shares were down about 2.27%. And again, like Infosys, despite that stock dip, the company actually shows consistently strong financials, both annually and quarterly, increasing revenue, increasing net profit year over year for March 2025, and also reporting zero debt to equity.
So the market sentiment is really overriding even strong financial health in some cases.
It certainly seems that way in the current climate. The focus is very much on the demand outlook.
Okay, and finally Wipro. Their shares also fell. What should we keep in mind about them?
Wipro was down about 2.58%. For the full year 2025, their annual consolidated revenue actually dipped slightly, but interestingly, their net profit increased. So a bit of a big picture there. Investors will definitely be watching their upcoming Q1 FY26 results very closely. Those are due out on July 17th.
Got it. So pulling all this together, what does this really mean for you listening and I guess for the IT sector more broadly?
Well, if you connect all these dots, the IT sector is pretty clearly facing some headwinds right now. These are being driven by those global macro and geopolitical uncertainties we mentioned. It's leading to demand contraction, deal closures getting pushed out, and the market's reaction to TCS, even with that profit beat, it highlights this trend. healthy profits are maybe not enough right now. The top-line growth, the commentary about future demand, about winning new deals, that seems to be what's really critical for investor sentiment at the moment.
That really crystallizes it. The focus has shifted.
It raises that important question, doesn't it? How will these underlying demand dynamics really shape the sector's performance over the next few quarters? And when might we see that investor caution start to ease up?
That is a great thought to leave everyone with. Thinking about how those broader forces mix with company specifics, a good reminder of how quickly sentiment can pivot.
Absolutely. And before we wrap up, just a quick but very important disclaimer for everyone listening. We are not SEBI-registered financial advisors. So if you are thinking about making any investment decisions based on what you've heard, please consult with a certified financial advisor first.